Well, hello everybody. Steven Sitkowski here, and welcome to this edition of my Market Insights. Happy to have all of you here. It is the 26th of January, 1/1/26. It's just amazing to me that we're almost through the first month of the new year. How you doing on all those resolutions? Sticking with them? All righty. Habits. Habits are the key. Quick reminder that everything that we do here is for educational purposes only, not intended as investment advice. So, kind of high level, what's moving the markets? We've got some big earnings announcements this week. These are potential market movers. Apple, Meta, Microsoft, Tesla, all set to announce. Trump threatens a 100% tariff on Canada, presumably if they cut a trade deal with China. Hasn't impacted the market. I'm kind of surprised that the market hasn't reacted to that. It typically reacts to tariffs, but we're giving this one so far a pass, I guess, because it's a threat, hasn't happened. And typically he pulls back on his threats. Do I really think we're going to put a 100% tariff on Canada? I don't think that's good for anybody. Gold surpasses 5,100 an ounce, just goes up, up, up. Um, Geopolitical unrest and a sinking dollar, it'll do that. 10-year Treasury is pretty steady. Not a whole lot going on with interest rates, in the low fours. We'll take that. Equity market certainly will. And oil prices ticked up just a little bit, sitting at $60.84, but frankly, they're not doing anything. So market breadth. If we look at advancers versus decliners on the New York Stock Exchange, basically we have a push and pretty much a push on the NASDAQ as well. So the real insight comes from new highs versus new lows, and new highs are dominating. So we had 437 companies hitting a new 52-week high. We had 76 hitting a 52-week low. On the NASDAQ, 742 new highs, 335 new lows, still better than 2 to 1. So obviously, we continue to be in a relatively bullish market. Last week's heat map, the red and the green are pretty much at a push. The only thing that was really encouraging is seeing Meta sort of get off the mat. That stock's been struggling. So they had a good week. MU Micron Technology continues to rip. AMD had a big week, up about 14%. So yeah, we had some companies that did really well last week. Here's the market scorecard for the year. Now, keep in mind, we're still in the first month of the year. Not a whole lot going on. The Dow, which is the blue chip side of the market, is up 2.2%. The S&P year to date 1%. The NASDAQ 1.1%. MSCI EAFE, which is a global index, up 3.3. 10-year Treasury is not doing anything. Oil prices are up on the year. Bonds are just kind of sitting there. Stocks trading above their 50-day moving average. We're at 66.2%. Anything over 50%, we'd consider to be intermediate term bullish. So we'll take that. Russell 2000 has been on a tear. The number of consecutive days the Russell has beat the S&P, well, the streak got stopped at 15. We were one off of the all-time high. So the Russell 2000 is an index consisting of 2,000 small cap stocks. So the small caps, it's kind of, where are you going to go when all the large caps are trading at all-time highs? Well, now you know. Current risk to the market, based on a survey that was done, 57% say the biggest risk comes from valuations, 20% or 27% a new Fed chair pushes for aggressive cuts and creates, well, I'll tell you what they're worried about. They'll create inflation. Crisis in private capital, 22%. Bond yields rise. I don't really see that happening. I mean, it's a possibility. I think it's a small one. Central bank hike unexpectedly as inflation gets sticky. 15%. AI causes notable impact in unemployment is at 13%. Those are the majors. I think tech valuations, I think that's fair. That would be my number one on this list. Retail buyers have been pouring money into stocks, retail as opposed to the institutional buyers. So, the person on the street feeling pretty good about stock market. Magnificent Seven buying, what is leading the charge? Um, NVIDIA. So this is where retail is putting money. And what is at the bottom of the list? Meta. So that's why I said it was kind of nice to see Meta make a bit of a comeback. Um, Google's been getting some attention. That's a lot of analyst pick for AI. So we see money pouring in there. Money's always going to pour into Tesla. Economic outlook, really good. So as you view this, the green is no landing, meaning nothing is going to change. The blue is soft landing, and the hard landing for the economy over the next 12 months. Now, this is a global perspective. Chance of a hard landing, very, very small. I agree with all that. Our consumers tapped out. I think this is real, and it's something that we need to pay attention to. Um, Savings rate as a percentage of disposable income is now down around 3%, and personal savings rates are falling. So I think people have been lulled almost to sleep into thinking, well, everything is just fantastic. And we definitely have a bifurcated economy. And this includes the people at the top as well as people at the bottom. So when you take out the people at the top, how much do you think the people at the bottom are saving? Nothing would be the appropriate answer. Market sentiment, um, it has waned a little bit from the previous week. So bullish went from 49.5, which was really high, to a very respectable 43.2%. So this is a percentage of people that are bullish on the market over the next 6 months. Historical average, 37.5%. And this week's earnings, we got lots of big companies going to be announcing earnings. Not so much today. Tomorrow we have Boeing, UPS, formerly Raytheon, now RTX, Texas Instruments. Any of those are potential market movers, but Wednesday is the day. Microsoft, Meta, Tesla, all after the bell. You also have IBM. Um, before the market opens, you've got Starbucks. So they're always kind of interesting to hear their impression of where we sit with the consumer and their willingness to spend on a discretionary basis. And then on Thursday after the bell, you got Apple. Before the market opens, we've got MasterCard. Again, we'll get some insights about the consumer. And then Chevron and Exxon report on Friday. Let's take a look at the charts, see what we can learn there. Hope all of you had a nice weekend. So this is a chart on the S&P 500. So the yellow line, that would be the 50-day moving average. It is still sloping up, which is bullish. We are trading above the 50-day, which is also bullish. So everything right now looks great. The only thing that I will point out is the fact that, we're right near the all-time highs. So we're kind of waiting to see if we can break through that. But you'll notice for the last 6 months, even though it's been a steady climb higher, it hasn't been straight up, and it almost never is, right? You get a dip higher, a dip higher, a dip higher, and you see that for the entirety of the 6 months. So my advice to you is if you've got money on the sidelines, buy quality names on the dips. It is proven to be almost fail-safe if there's any such thing as being fail-safe. So everything feels, from a financial standpoint, pretty good. Socially, geopolitically, can't necessarily say the same thing, but hey, it is what it is. And so far, the market is not responding in a negative fashion. So that's good for all of you investors. All right, my pleasure being with you. I will see you again next week. Have a fantastic week, and bye for now.